On the news, global equities already received a tailwind from progress toward a vaccine as an Oxford University trial shows promising results. And Novartis trims its 2020 sales forecast on pandemic disruption. The group's CEO told us he's cautiously optimistic about a COVID vaccine. We'll also hear from Sergio Ermotti after UBS says it may resume buybacks next quarter. Matt, futures to the upside then.
Yeah, very much so, especially here in Germany. You can see futures on the DAX up 1.2%. Futures, FTSE futures are gaining 0.7%. Let's take a look at the equity indexes as they open up with the global macro movers screen on the Bloomberg. GMM Go is how you access this screen, and it shows you a number of risk assets. On the left-hand column, you can see the equity indexes start to open up. The FTSE always the first out of the gate, and the FTSE 100 is now up about 0.3%. The IBEX in Madrid gaining more than 1% right now after that EU rescue package passes. 750 billion euros worth of funds, 390 billion going as grants to the countries that need it most. Spain, of course, one of those countries. Italy, one of those countries. Germany, interestingly, I think, getting a rebate in the European budget in order to vote for this package. So the Frugal Four all get rebates, sort of payments for votes, if you will, and Germany said it wanted some too. So the DAX up 1.2% this morning. You can see that we've got the AEX in Amsterdam open up 1%, and the CAC 40 up 0.8%. I wonder why the French didn't ask for a rebate. They just voted for free. That doesn't seem very profitable, but in any case, we do know that the Frugal Four in Germany got money from the budget, got rebates there. Some of them, Anna, get rebates all the time. In fact, probably it's really just a semantics issue, right? They all get money somehow in order to participate. And I guess, wouldn't it be great if we got that as taxpayers too? You know, I'll only pay taxes if you give me a certain amount of money first.
I thought from a UK perspective, we thought that it was just Margaret Thatcher and Britain's, and maybe the rebate would have gone the way of Brexit. But no, rebates are alive and well in the European Union. Emmanuel Macron have been campaigning to end them. So maybe we'll get to our colleague Maria Tadeo and ask her some of those very good questions around the rebate and what is going on with Germany. We'll get to her in a little while. But let me just get to you some movers this morning. We've got Novartis to the downside, down by 1%. We just spoke to Vaz, the CEO there, of course, about their business. They've got some they're changing their guidance, essentially, homing in on some guidance. Alfa Laval reporting numbers, that stock up by just over 5%, so 5.4% to the upside. René Cointreau also increasing guidance this morning, and that stock up by just over 3%. UBS, it seems, pleasing on so many levels, better than expected in terms of the underlying numbers, the wealth management story also better than anticipated. So plenty of stocks to talk about. on the move this morning. Let's get back to the big story, though. European leaders have agreed on a landmark stimulus package that will see the bloc issue 750 billion euros of joint debt, as Matt was saying. The deal, which came through after 4 days and nights of tough talks, is a big win for the French president and the German chancellor, both of whom drafted an early outline for the proposal back in May. The emergency fund will give out 390 billion euros of grants and 360 billion euros of low-interest loans, as Matt was just mentioning. Let's get to Brussels then for an update with our colleague Maria Tadeo. So we talked about the success that this represents for Macron and for Merkel, and we talked about how they've managed to get the deal across the line. That's a great political signal in Europe, isn't it, about burden sharing in particular, Maria? But what about some of the details here? Matt and I have been talking about the rebates and where they're going. Explain to us what the backstory and what's happening there.
Yes, Anna, look, it's always difficult to say who won and who didn't because there's so much spin that happens in Brussels. Every time you get a deal, of course, every country will tell you it's a great deal for our country. When you look at Emmanuel Macron and Angela Merkel, they did manage to get this deal through the finish line. The grand component was watered down, but again, this is something that has never been done before in the European Union. And I would say what's really striking here is that just a few months ago, we were talking about the ESM. Everyone said the best way to go about this, or ultimately the only way to go about this, is that Italy and Spain are going to have to tap the ESM. Today, both countries are going to get 82 billion euros, 72 billion euros respectively, that they are not going to have to pay, and their yields are moving lower. So you could argue, yes, this really vindicates the Macron-Merkel plan, and it has been good for the European periphery, even if watered down. Of course, the flip side to this, as you mentioned, is that the Frugal Four, they made it clear they wanted to see those rebates stay in the budget. Emmanuel Macron had said that after Brexit, he did not like a Europe of rebates, but clearly rebates are very much alive, and they're going up for the Frugal Four. If you look at the German amount, it's pretty much flat. It's still in there, and it does hint, or Angela Merkel seems to be hinting at, that this was ultimately the price of a compromise.
When you're the richest country, you definitely need a rebate in order to vote for a package that you yourself crafted. It makes a lot of sense. Maria, thanks so much for joining us. Maria Tadeo out of Brussels covering this really market-moving package. Joining us now is Willem Sells, HSBC Private Bank Chief Market Strategist. Willem, how much of this package do you think was priced in? This agreement seemed like it was destined to go through. They just needed to get the Frugal Four on board, and they've done that with a 50 billion euro payout.
Yeah, so I think, we upgraded European stocks last month and actually moved bonds as well, and then the euro as well from underweight to a neutral position last month, and in the expectation actually that the deal would happen, maybe with some variations, but ultimately, the big headline I think today is that it passed. Obviously, it still needs to be ratified by countries, but that's the big headline. So therefore, some market movement, but not major. We think that the euro actually has rallied quite a bit and potentially has some weakness ahead because it's a dollar move really that we've seen over the last few weeks, where the dollar has been unduly punished, maybe because of some concern around the COVID situation there. We think the US economy is still quite strong. We have had quite a big risk-on movement over the last few weeks that may continue at a slower pace, so therefore the dollar should recover, and the euro, I think, could potentially go back to 110.
We're just hearing, good morning to you, Willem. We're just hearing from the German Finance Minister, Olaf Scholz, who's saying that the EU fund is a turning point towards a stronger Europe. We've talked about the sort of cliff face of this and the market reaction that we're seeing in the very short term, but medium term, is this something that could build a stronger Europe because of what it signals, because of the political signal it sends?
Yeah, so the reason why we upgraded Europe from an underweight to a neutral after 5 years of underweight really is because in spite of the cheap valuations in Europe, where even that gap between price earnings ratios between Europe and the US had widened to 5 points, last month. It is now already tightened to 4 points. There was no reason, up to basically last month to change for a trigger for that PE ratio to tighten, because Europe had systemically lower growth. It was obviously going through quite a deep COVID crisis. There was always the question around integration and cohesion of the Eurozone. That is the element that is now changed. So it is a positive in terms of fiscal spending and therefore growth outlook, I think, not necessarily this year, but 1 year, 2 years from now, but also this signal of cohesion and that tail risk of a breakup, which is really, almost completely disappeared now.
Thanks very much, Willem. Stay with us. Willem Sells, HSBC Private Bank Chief Market Strategist. More to get through with Willem. I just want to bring you some breaking news that's crossing the Bloomberg in terms of the eBay classifieds business. And we've been talking for some time about whether it would be a South African company that gets hold of this in the shape of Naspers, or whether it would be Adevinta out of Oslo. And it is Adevinta who has managed to buy the eBay classifieds group for $9.2 billion in cash and stock. eBay will remain a shareholder here, though, or rather they'll remain a shareholder, they'll become a shareholder of Adevinta. They'll get $2.5 billion of cash and 540 million shares in Adevinta. They are going on to say that the deal is expected to close by the first quarter of 2021. Shares in Norway of Adevinta have been halted. I think they were halted yesterday, so we'll see when they open up what kind of response we get. Coming up on the programme, pharmaceuticals come into focus after Novartis trimmed its sales forecast for 2020, and companies work to find a coronavirus vaccine. We'll discuss the healthcare sector with Willem Sells. This is Bloomberg. Welcome back to the European Market Open. 12 minutes
Good
into
morning, everybody. I'm placing an order to sell short Japanese yen at 107.299.
Through the night it took once again, but stocks in Europe up by 0.9%.
Order placed to sell short
but it's also the
Japanese yen at 107.299.
Chief market strategist is still with us. And Willem, we had numbers from Novartis, and that made me look for details of the healthcare sector in your notes. And you talk about health tech. And what
will want to spend much more on healthcare. Governments will want to spend more on it as well. So it is a structural growth sector, and actually something that has a lot of interest from a lot of our clients who are looking for areas to either directly invest through private
Position open and Japanese yen at 107.300. I opened new position. It's short position at 107.300.
Of all of the smart technology to give those advantages to provide people with better health at a cheaper cost. So in the West, it's more about providing it at a cheaper cost. In emerging markets, it's more about giving people access to healthcare through technology.
You also like cyclical stocks. I wonder what you think. I always wonder about the automakers, and really especially in light of the hit that they took during COVID, the fact that so many consumers may be out of a job when it comes time to, get out of your house and buy a new car, and the fact that automakers have to invest so much in electric powertrains. All of these things seem to make investing in automakers a difficult prospect.
Correct. So we're, to be clear, we're not overweight on cyclicals. We have a neutral cyclical stance on cyclicality. So with that overweight on some cyclicals and on some defensives. I think you're right about the automotive sector, which has the real challenges of having the self-driving cars together with the investment in green technology as well. And it's only really those companies that have the strong balance sheet, the strong brands, etc., that are going to be able to position themselves well for the future. This is actually a theme which runs through the different sectors in our whole investment strategy, is that we continue to stick to quality. We're not going down into the jungle, in the poorer quality companies, because it's not just around survival in these months as we transition this crisis. It's also the ability to invest for the future, where you have to have that strong balance sheet. It's also about being able to maintain your margins, because we're starting to see some margin pressure, either be it from taxes, from the deglobalization, or actually from cost pressures that you're starting to see, even labor market cost pressures, where there is going to be an element of fairness and social security contributions. So it's only those companies with the strong brands that are going to be able to charge that through that cost increase, because clearly there is from a demand perspective, if demand is weak, we're not going to see a lot of CPI inflation. So many companies are going to have that much. So stick to the quality companies.
Willem, I wanted to ask you about supply chains, because you talk about automation as being one of your themes that you invest around. A recent HSBC, it was in fact, a survey of customers in 14 nations talked about actually how the majority of those clients, they don't want to reshore all their supply chain. They just want to exert more control over it. They want to maybe diversify some of their suppliers to different geographies. How is that kind of trend informing your investment strategy?
Yeah, so we like automation, and one of the reasons is indeed the supply chain movement, where somebody labeled it as moving from a just-in-time into a just-in-case situation, where companies are looking at we've gone through trade tensions, we've now gone through COVID, both shocks to the supply chain. Now you're not going to be able to repatriate everything, to re-onshore everything. We already saw that last year when there were the first signs during the trade tensions of Chinese companies looking at, can I start to produce somewhere else? Well, the problem obviously is that if your suppliers or your customers are sitting next to you in clusters in China, you're not able to rip out that company and just put it somewhere else. Also, obviously, you have to have the expertise and the labor market, but labor market skills. But still, we think they're going to diversify their supply chain to some other countries and also some partial re-onshoring. That is going to lead to a lot of automation to make that supply chain safer for the customer, but also for the worker, and also more secure and more certain.
Willem, thanks so much for your time this morning. Willem Sells, HSBC Private Bank Chief Market Strategist. Willem will be continuing his conversation with us on Bloomberg Radio. Matt and I head there at 9 o'clock UK time, 10 o'clock if you're in Berlin. Coming up is the worst over for UBS. The bank has signalled a return possibly to buybacks. What about dividends? We'll bring you our interview with the CEO, Sergio Ermotti, next. This is Bloomberg.
Our basis scenario, the 70%, is de facto based on severe economic contractions in the next few quarters and with a recovery, although not to the same extent that we will see the slowdown in 2021 and then coming into 2022. The 30% is of severe recession, and this is really the one that we need to put in our models in order to have the prudence necessary.
Look, in the past 24 hours, vaccine and volatility, they've combined, haven't they? The narrative has shifted. Could a vaccine deliver the kind of alpha for markets in the second half that the dislocation that we've seen in the first half. Could this vaccine really change the V narrative?
No, the vaccine probably could give a better hope, in my point of view, at least for the midterm, not the short term. The short term, yeah, maybe there is a little bit of rebound, but a lot is priced. A vaccine would not be impactful in the next 12 months in any case. So I do think that the reality is that what we will experience after this crisis is that many companies will be able to make it and go through and be probably even stronger or be well positioned for the future. And the one that were already struggling before the crisis probably will have a hard time to recover. And this is where you will see probably still a second leg of the economic consequences of the crisis being played out.
With that scenario, are we underpricing, underassuming the level of defaults that will come globally?
Well, it remains to be seen, but it is fair to say that markets remains quite complacent, I would say. That there is not a lot of, if you look at equity markets, even credit, which were quite a good investment pick, as we spoke last time.
Call, to be fair.
Well, now they are, if you look at spreads have been coming and therefore there is not a lot of room for many negative surprises going forward.
JP Morgan says that as far as the credit markets are concerned, we are in a hallucinogenic moment. We're locked in a collective hallucination in credit markets. Does that chime for you in Europe and the US, Sergio?
Well, but it's not very surprising if you see across all asset classes the amount of liquidity and money around is driving this kind of situation. So one has to really continue to look at a huge diversification and not avoiding concentration on any kind of asset class or underlying.
You still think there's mileage in credit, though, even at this stage with the central bank backstop?
Where in some areas maybe there are opportunities to pick up, but as I said before, the name of the game is diversification and also taking a little bit maybe liquidity risk on certain kind of investments in return of higher long-term returns.
And that was the CEO of UBS, Sergio Armati, speaking to our own Manus Cranny. Manus joins us now. He's in Zurich on tour, speaking to the biggest CEOs in Switzerland. Manus, great interview there. Buybacks, the dividend, they seem to be the main drivers this morning. How important are they to the UBS narrative?
It's what sets UBS really, I think, apart from many of the others. Yes, all the regulators around the world held back from bank dividends. If UBS can get back to paying the tail end of 2019 and begin the conversation again about buybacks, the language that Armati used during the interview was a possibility but not a commitment. This is to share buybacks in the fourth quarter. Now, everything's got to go pretty much according to plan to deliver these kind of aspirations. You can ask yourself, their credit losses, $272 million, yeah, the US banks put aside $35 billion. Even if the UBS model used the US accounting system, you're looking at losses of around $672 million. So a lot has got to go right, Matt, Anna, to get this dividend and buyback in place.
Manus, just very briefly, what about the trading side of things?
A cracking set of number of FICC. This isn't an investment bank. I just want to remind everybody, this is one of the biggest wealth managers in the world, but FICC up 118%. You may say, barnstorming, yes, it is in that context, but it's nowhere near what you saw, from example, in Morgan Stanley, 167%, Goldman Sachs, 148%, but it is still a cracking number, and the wealth management beat comfortably. So a pivotal moment will come around the elections. 61% of their clients will change their portfolios. There's a wealth management moment coming, and it comes at the election. Anna, Matt, good morning.
Manus, thanks very much. Bloomberg's Manus Cranny live on the ground in Zurich. It's just like old times, isn't it? Manus on tour, talking to all of those key Swiss leaders. More from him later on this week. This is Bloomberg.
Welcome back to Bloomberg Markets. This is the European Open, 30 minutes into the trading day right now, and we're looking at gains across European equity indexes. Let's take a look at the benchmark stock 600 right now. You can see it was up and away at the open, and it has remained over the last hour at gains of around 1%. If you take a look at the GRR screen on the stock 600, you can see in terms of the group ranked returns, the industry groups that are moving, all of them up, but the biggest gainers are the cyclicals and the bank stocks. So auto and auto parts makers, as well as bank stocks, leading this rally. Tech and financial services not far behind, but of course everything is gaining, with telecoms the only industry group that really isn't making much headway. Let's get the Bloomberg First Word news right now. Here are today's top stories from the Bloomberg terminal. EU leaders have reached a landmark deal on 750 billion euros of stimulus. It will see the bloc issue joint debt to help member states tackle the economic downturn. The package includes 390 billion euros of grants and 360 billion of low-interest loans, and the agreement comes after more than 4 days of negotiations. It required unanimous approval, and it took a little bit of watering down and a lot of rebates to get that done. Some British lawmakers are looking for the UK to take an even harder line on China, and they'll use a visit by U.S. Secretary of State Mike Pompeo to put pressure on Prime Minister Boris Johnson. Sources tell us the MPs want Johnson to impose sanctions on Chinese officials over human rights abuses. One MP is calling for a strategic overhaul of the UK's relationship with China. Jeff Bezos added $13 billion to his already high net worth yesterday. That's the biggest single-day jump for any individual since the Bloomberg Billionaires Index was created back in 2012. Bezos' wealth is up more than $74 billion this year alone. That would make him, that increase alone would make him the 7th richest person in the world, if he weren't already the #1 richest person in the world. Jeff Bezos, I guess it's fair to say he has a high net worth when he has the most money of anyone in history, almost $200 billion in total. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. Anna?
Yeah, that's a lot of parcels, isn't it? Let's talk about tech. Tech has long been the poster child for growth, but steady earnings growth and an ability to make money in the stay-at-home world has made the biggest tech names synonymous with quality and utility too, perhaps. As the industry's earnings get underway, Scarlett Fu goes in search of potential problems.
The biggest knock against big tech, their outsized gains leave little room for misses, and investors who've been piling in may be quick to flee, especially if vaccine optimism or an improving economy sparks a lasting rotation into other sectors. So here's what could remove some of the shine from the 5 biggest tech names. For Apple, the pandemic may delay the iPhone 12 and leave the company unwilling to give a sales forecast for this quarter. Amazon revenue likely grew more than 25%, but it's also spending a lot. How much will it spend to keep its delivery network running smoothly and on COVID-19 expenses? Microsoft is benefiting from a shift to the cloud, but is it giving up some revenue now by allowing deferred payments on some contracts? And if the economy stumbles further, advertising budgets could disappear, hurting Facebook and Alphabet. Alphabet tends to rely on small businesses, particularly in the hard-hit travel sector. When you've only gone up, it doesn't take a lot to knock you down a peg.
And that was Bloomberg's Scarlett Fu looking at tech's surge as the industry's earnings reports get underway. Joining us now is Nicholas Janvier, Columbia Threadneedle Investments U.S. Equities Portfolio Manager, to talk a little bit about, well, first off, let's talk about tech. Nick, I mean, the gains have been incredible. Anna was pointing out this morning that I think the top 4 tech companies are worth more than the entire Japanese market. Can it go any higher from here?
Good morning, Matt and Anna. Thank you for having me on. Well, look, I think it certainly can go higher from here because at least what we've seen thus far is the great lockdown has really cemented the dominance of these mega cap growth companies. And when you're looking at the S&P 500, the index is obviously very, very top heavy with these types of companies. But certainly for me, as someone who focuses much more on the mid and small cap Russell 2000s, it's a little bit not to have a little bit of large cap envy because, of course, the Russell 2000 is not quite as populated with these type of business models.
Yeah, let me ask you about that distinction then, Nicholas, between the big caps and the small caps in this space, because I was looking at this chart around momentum in the NASDAQ, and it's at the highest in some 20 years. And so then you ask whether this is going to continue to be the story for the large caps or whether it's going to be companies away from the NASDAQ that do well next. Where are you looking then for the next leg of tech gains?
Yeah, sure. One of the things that we've seen thus far, there's been a lot of focus on this value versus growth, underperformance or outperformance, depending on which side of the table that you're sitting on. One of the things that is a derivative of that has been massive outperformance of large versus small. If you think about the S&P 500 versus the Russell 2000. Of course, the challenge with the Russell is that the Russell is more domestic, more cyclical, and more consumer-oriented. But it's not to say that there are not businesses in the Russell 2000 who are also benefiting from the stay-at-home economy. Probably the most direct play would be for one to be looking at the suppliers of these mega-cap growth companies, because those are the type of businesses that you're going to find in the Russell 2000.
Are you concerned at all about the wave of bankruptcies that everybody's been warning about? A lot of people saying that the third and fourth quarter are going to be worse. The second half is going to be worse than it was in the second quarter. Is that going to hit the smaller companies and then cause pain all the way up the chain?
We have for a long time been very focused in sharpening our pencil on what's going on with the balance sheet of the companies that we're invested in. So from an index perspective, I do think that you are, if this lockdown continues to go on as is, you are going to start to see some real pain as far as these business models are concerned. Certainly the more highly levered business models that are part of the Russell 2000. For us, one of the things that's really important from the perspective of an active manager, of course, is to avoid those businesses that are secularly challenged and heavily leveraged. So when you look at our portfolio, you're not going to find any of those names represented in our holdings.
What difference will the election make, Nicholas, as we head towards it in terms of this, the allocations to different parts of the tech universe? What bearing will the election have on that?
Well, historically, markets will certainly start to focus on the election as we get closer to the Labor Day holiday in the U.S., which is about 4 to 5 weeks away from today. One of the really important things that an investor is going to have to do here is to be able to distinguish between noise, which is going to cause a lot of short-term volatility, and information, which potentially is going to have some longer-term impact on industries and business models. Specifically to tech, I would say that they're facing the same issues that a lot of the companies in the market are going to be facing, and that's the potential that the tax rates, the corporate tax rates, may start to move back up from here. When you've looked at some of the policy proposals that Vice President Biden has put forth, if you do have a change in administration, he's been very clear that they would be looking to roll back some of the tax cuts that were enacted in 2017. So the expectation is not going to be that the tax rate is going to go back to the previous 35% at the statutory level, but something in the mid-20s certainly seems likely to us. So I think it's important for an investor to be focusing on where are your companies today as far as what their actual tax rates are, how much of their their earnings or they're sourcing from overseas versus the domestic market, and all of those things are going to play a big part in what their effective tax rate ends up being from here.
What do you think about the prospects for the dollar, Nicholas, and how does that affect investments from the U.S. point of view? I mean, do you see it weakening, and is that just fantastic news for the tech companies that are going to be collecting in foreign currencies?
Yeah, you know, I try not to be overly focused on the dollar because, of course, that's thinking about things from a very high level macro perspective. But I can tell you this. Generally speaking, it is well understood that a weaker dollar is good for companies that source a lot of their incomes from overseas. So to the extent that the dollar does weaken from here, there are clear and obvious advantages to companies that have a lot of overseas exposure. One of the things that is not talked about a lot is a weakening dollar also has a lot of benefit from smaller companies. From the perspective of it allows them to source their raw materials at lower prices, right? So from the perspective of a small and mid-cap investor, I'm much less focused on the impact of the dollar from a top-line perspective and much more focused on the potential benefits that come from that to the cost structure of these companies.
Okay, yeah, really interesting with that global supply chain. Nicholas, thanks very much for joining us. Nicholas Janvier, Columbia Threadneedle Investments U.S. Equities Portfolio Manager, talking about the big and the small caps when it comes to technology in particular. Up next, we'll talk about Europe and the politics. Europe united. The region's leaders agree an unprecedented stimulus package to pull their economies out of recession together. We're live in Brussels for more detail. This is Bloomberg.
Welcome back to Bloomberg Markets. This is the European Open, 45 minutes into the trading day and looking at gains across The European equity indexes, the DAX rising almost 1.5%. Let's get the Bloomberg Business Flash right now. For that, we go to Laura Wright in London. Laura?
Thanks, Matt. UBS is signalling it may resume share buybacks and dividend payments as soon as next quarter. That's after reporting higher than expected net new money at its wealth management business. But Chief Executive Sergio Amotti says a buyback in the fourth quarter is a possibility, not a commitment.
Of course, the situation out there is still very challenging and very difficult to predict. So we should never be complacent. It's a strong first half, but we are also very focused on managing the second half of the year, but also with a level of confidence that should the situation be continue to be somehow benign in respect of our business, you know, we should not rule out at this stage, you know, some degree of share buyback.
Danske Bank may need to cut at least 1,000 jobs if it's to meet the latest cost-cutting goals. That's according to analysts monitoring the lender. The bank's chief executive told Bloomberg on Friday he's planning significant staff cuts. The lender isn't commenting beyond the guidance it gave last week. That's your Bloomberg Business Flash. Matt, Anna.
Laura, thanks very much. Laura Wright in London with the Business Flash. Back to developments in Brussels overnight. After 4 days and nights of tough talks, European leaders have agreed on a landmark stimulus package that will see the bloc issue 750 billion euros of joint debt. The emergency fund will give out 360 billion euros of low-interest loans and 390 billion euros of grants. That's less than the 500 billion euros in grants that the French president and the German chancellor had included in the earlier draft of the proposal. But the deal represents a victory for a collective EU response to the crisis. Joining us now from Brussels is our reporter Maria Tadeo. And Maria, that's the positive story, that's the Europe United story, that's the didn't we do well, we reached an agreement story, and clearly it's been a hard journey to get there after all these days and nights of talking. Now we've had some time to look at some of the details, though. When is some of this money actually going to get to the places that need it?
Yes, Anna. So now we do have more detail. We know the overall package is 750 billion euros. 390 will be handed out in grants to countries badly hit. That is confirmation of the figure that we reported yesterday. But if you look at the breakdown now, we're looking at 82 billion euros for Italy and 72 billion euros for Spain. Now, there will be a lag in the payment. This doesn't mean that the money is going to come tomorrow. We're looking at that money being front-loaded between 2021, 2022. Having said that, when you speak to officials from the periphery, they say that this is not necessarily a bad thing, that the European Central Bank has provided a lot of relief for this year, and the governments really need time to figure out how they're going to spend the money and to be able to really absorb the windfall that they're about to get. So yes, it's not an immediate solution, but there is relief here that a country like Italy or Spain are really about to get a lot of money that they're not going to have to take on as debt, and that was their major concern here. They did not want to see their debt to GDP ratio increase as a result of this. When you look specifically to the case of Italy, it's also interesting, Giuseppe Conte this morning pretty much ruling out that he's going to want to tap into the ESM given the compromise that we had this morning.
So the question I think now, Maria, is that enough? I mean, we've seen trillions go into the U.S., and they're talking about trillions more. Of course, it's a much bigger economy with a lot more people. But, you know, you've seen as much as the entire European rescue package go into Germany alone. Are these, you know, double-digit numbers in billions going to be enough to save economies like Spain and especially Italy with more than 100% debt to GDP already?
Yes, Matt, and you make actually a very good point, and there is a very clear sense, and this is, again, going back to the point of the frugals that really insisted the money has to be used well, and we really need to see major reforms. There is a sense here that this, of course, is good news for the periphery. Just a few weeks ago, we talked about the ESM. It seemed that this was going to be your typical bailout. Now these countries are getting a windfall, but this is not going to be enough. We're going to see, or we're going to have to need reforms in countries like Spain and Italy, a real growth plan to kickstart those economies. And of course, the question mark as to what exactly is going to happen with the health situation. We don't know whether or not we're going to see a second round of the virus, and we don't know how quickly both economies can go back to normal. So yes, you could argue it's good news that this money is coming through, but this is just a short part of the story. There's a much bigger issue here. And when you look at Italy, you're looking at, well, structural problems that have been an issue for decades now, such as the low productivity and those problems that are really becoming structural in the country.
Maria, thanks very much. Maria Tadeo on the ground for us in Brussels, enduring that 4-day summit for us, bringing us all the detail. Let's get back to some corporate news flow. We've seen some M&A news that is certainly moving the markets. eBay, as we told you earlier, agreed to sell its online classifieds business to Norway's Adevinta. We see Adevinta is up by 30% right now. We don't always see acquirers making gains to that extent. They managed to beat off Prosus, of course, owned by Naspers. They also managed to beat off private equity competition to get their hands on this asset. This is Norway's biggest deal in more than a decade. So quite a significant story for Adevinta, which operates some other marketplaces in Europe and in Latin America. It was actually spun out of Schibsted last year. Up next, we will continue the conversation around the EU landmark deal and break down the market reaction for you. We'll be joined by Christine Aquino, who leads our Markets Live team here in Europe. This is Bloomberg.
Welcome back to the European Open. We are almost an hour into the session and looking at gains of more than 1% on the CAC 40, 1.5% on the DAX. Joining us now to talk about this rally, Christine Aquino, who leads our MLive coverage in Europe. And Christine, it really does look like this is the EU package, the EU rescue fund that's driving these gains, even though it may have been expected. Markets seem bullish on the completion. Is that the case?
Absolutely, Matt. I think, the announcement in mid-May was one thing, and the fact that it was even on the table was definitely a watershed moment in a lot of ways for Europe. But the fact that there was a concrete deal, and it came as soon as now, as we know from the history of European politics, that's not exactly the case when we were looking at previous spending deals such as this, and it involves all the EU members agreeing on a single thing unanimously. That really is quite a feat for the region. And it's even surprising to us over in Markets Live, the fact that there was still this capacity for a rally on the actual announcement today, as we've seen in examples similar to this in the past. There's been a tendency for investors to buy the rumor and sell the fact, but we're not seeing much of that today.
Yeah, not seeing it, and in particular on Italian assets then, Christine. So we see in the bond market and also in equity markets where the FTSE MIB is up by more than 2%, really outstripping some of the gains we're seeing elsewhere.
Absolutely, Anna, and that just goes to show how much Italy has at stake in terms of benefiting from this program, given that Italy is, of course, one of the countries in the euro area that has been hard hit by the virus, and the economic impact of that is really going to be long-lasting beyond this year and the next couple of years. And so it's really a testament to how much Italy has to gain from this package, the fact that both its bond markets and its equity markets are rallying. Notably, of course, the 10-year Italy bond spread has nearly erased its post-pandemic widening. That's back down towards 150 basis points versus German bonds, and back to levels before the pandemic really took a hit in Europe in late February.
All right, Christine, thanks very much for joining us. Christine Aquino leads our MLive team here in Europe. For her work and the work of her colleagues, just type MLIV GO on your Bloomberg terminal. That's it for the European Open. Stay with Bloomberg Television. Up next, it's surveillance. On the other hand, you can also switch to Bloomberg Radio. Anna and I are headed over there to continue our conversation with Willem Sells from HSBC. If you're in the London area with this beautiful view of St. Paul's, just switch over on DAB Digital Radio to Bloomberg.
New order placed to sell short Canadian dollar at 135.061. So order placed to sell short at 135.061. New position open at Canadian dollar. Short position at 1.35061.
Deal done. EU leaders agree a 750 billion euro coronavirus recovery package after more than 4 days of tense negotiations. The worst may be over. UBS signals the peak of the crisis is behind it. As a Swiss bank considers reviving shareholder payouts, we'll hear from the chief executive, Serge Armotti. And Novartis trims its 2020 sales forecast on pandemic disruption. The group's chief executive tells us he's cautiously optimistic about a COVID vaccine. Well, good morning, everyone, and welcome to Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, the markets are moving sideways a little bit, but they're still quite optimistic about things to come. This is what I'm looking at overall. A lot of the focus, of course, on the markets, if we can get the board up for you, is dollar weakening, but actually stocks advancing globally. Also, U.S. equity futures are up after these European leaders reached a deal on the landmark stimulus package. And if I look at equities rising also across Asia, Australia, for example, outperforming after the government boosted job subsidies. So after 4 days of tough talks, European leaders have agreed on a landmark stimulus package that will see the bloc issue 750 billion euros of joint debt. The emerging
I'm placing an order to sell short euro at a price 114.416. So order placed to sell short at 114.416.
And we are getting one today, even if, of course, as you...
New position open on euro at 114.416. Short position.
7 years. So overall, it's your typical European compromise where every country will tell you it's a good deal for their government, their taxpayers on the country, and it's overall a good thing for the European Union.
Thank you so much, Maria Tadeo, there in Brussels for us. Now, joining us this morning is Andrew Sheets, Chief Cross-Asset Strategist at Morgan Stanley. Andrew, great to have you on a pretty momentous day. When you look at the stock market performance, they seem to be okay with the deal. How long can it last?
Yeah, well, look, I think it is important to step back and appreciate that this is a very big deal. It's very significant. It's, I think, been surprisingly close to the initial proposal, and it's happened quite fast. I mean, even though I felt, our call at Morgan Stanley was quite optimistic around the deal getting done, we still thought there was a good chance it might take kind of a second session, to kind of finally wrap things up. So the fact that they did it in this round is good news. And I do think it's helpful to the European story, where European assets have lagged for a long time, where they're generally cheaper. And so I do think that we can see some sustainable outperformance from the euro, from European equities here over the coming months. I think the bigger concern is that, this is one of several positive things that's happening in July, along with earnings season, along with maybe another U.S. fiscal package. Once we're out of July, those positive events are behind us. And so I think I'm more concerned in that August-September period, what's going to be then the next catalyst to take kind of the broader market higher.
Yeah, and Andrew, you basically argue that over the next 2 months, the positive catalysts fade, there's seasonality getting worse, and near-term risks emerge. What does that all mean for stocks?
Yeah, so I think it means a tougher period for stock markets. So there's that old saying, which is a great saying, that it's better to travel than arrive, and I do worry a little bit that as you're into August, you've arrived with a number of these factors that we're having a pretty good earnings season now, but that will be behind us. We've had a very successful European summit, but that will be behind us. That we do think that the U.S. will pass another round of fiscal stimulus around the end of the month, but again, that will be behind us. And even I think some of the good news on vaccine development, which is certainly very encouraging. Again, the kind of the phase 1 data will be behind us, and it will be some time while the market has to wait for what are the results of the phase 3 trials, which we think might not get until sometime in October. So it's that kind of gap in news at a time when we do think there's some rising risk that some of the economic data momentum softens a little bit, and that you're into a period where, at least for U.S. assets, kind of August is when you can often start to see some worsening kind of pre-election performance, that the market starts to care more about the U.S. election. It's harder for people to take on new investment ahead of the election, and I think a lot of investors just decide to wait until they know the result before making their next investment.
So what are your top picks, Andrew? Where do you find value from here? What kind of strategy should we be looking at, given that I guess some of the safer stocks are also look expensive?
Well, that's a great point. I think complicating this, I would love to say, that we're the only ones who are concerned about, a slowdown in growth. I think the market's very concerned about a slowdown in growth. I think you see that in where bond yields are. I think you see that in where volatility is. I think exactly as you mentioned, I think you see that in how much a lot of these defensive stocks have outperformed. So it doesn't, I think, do.
Stop on profit for Canadian dollar at 1.35041.
Valuations in Europe are very reasonable. You don't election-related risks. I think also cash corporate bonds have a very positive dynamic behind them, in that you've had very heavy issuance of this debt from April through now, as companies have kind of rushed to grab financing while it was available. We think that now slows a lot, and so you'll just have far fewer bonds coming into the market, which could help some of that performance and some of that supply-demand imbalance in the corporate bond market.
Andrew, do you buy what central banks buy? Is that still a good strategy?
I think in credit it is, because I think there again you could have this kind of dual dynamic of the central banks are supporting the markets and providing a backstop to the market, and supply is then slowing down. But I think the tough thing there is, I think if we look at, say, the government bond side, central banks have already pushed real yields down to record low levels. That obviously, I think, reduces the risk reward. And I'm actually very curious, because I think it's actually very hard to tell where expectations are for the Fed meeting next week. And I think that we don't expect the Fed to announce any major new action at that meeting. That's our expectation, but I think investor expectations are actually quite varied about what they're expecting, and so to the extent that if they don't do anything, does that come across as actually a little bit of a disappointment is, I think, a kind of a big unknown.
Andrew, thanks so much. Andrew Sheets there from Morgan Stanley stays with us. Now, coming up, the tech trade comes roaring back. We'll talk big rally in the NASDAQ with Andrew Sheets. That's coming up next, and this is Bloomberg.
We closed position on Canadian dollar at 135.041, profit £200.
It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Still with us, Andrew Sheets from Morgan Stanley. Andrew, what do you do with all of the technology stocks right now? You look at NASDAQ, and it's on a tear.
Yeah, so look, I mean, we've been more cautious on the sector, and that obviously has been the market's been moving the other way. The sector's been very strong, but I think we're focused on kind of in the near term, a very specific issue, which is that we're into an earnings season. We're into an earnings season that's actually gone pretty well so far for the companies that have been reported. But a lot of the big tech names, they haven't reported yet. They're reporting later. And not only are they reporting, later in the earnings season, they often haven't had their expectations be cut nearly as much as a lot of the names that have reported so far. So I do think this is going to be a really important earnings season, generally, but especially for a lot of the kind of the very popular kind of secular growth and tech names where earnings expectations have not really come down, where I think the market is expecting them to be quite immune in some ways from everything that's going on, and that might be the case given their business models, but it might not be given kind of how far-reaching the implications of this virus have been. And so, our concern is just simply that maybe those estimates are somewhat too high, and that causes some relative disappointment as we go through the earnings season.
Andrew, is that for all tech or for the big tech, or would you do a difference between, the Asian tech, for example, and the U.S. tech versus the Europeans, although we don't have many European names at the moment?
Yeah, so I do think this is maybe a slight relative advantage for Europe, because I don't think you have the same issue of overly optimistic earnings expectations. The earnings in Europe have been slashed dramatically, which we think creates actually just kind of a very easy bar to clear for Europe. And I do think in the U.S. you could see quite large differentiation between the tech names, because I'm sure you will see some names that are able to work through this and show that they really are less cyclical. They really are immune. They're really benefiting from this new environment that we're in. I think our concern though is just there will be enough names whose business models will prove more cyclical. And I think it's interesting. Morgan Stanley's analysts did a large survey of CFOs, and a result of that survey was actually a pretty sizable indication that companies are planning to cut their technology investment, just given companies are forced to cut costs given everything that's going on. So again, that to us indicates that the sector might not have quite the kind of the halo, the kind of the non-cyclicality that is currently being expected of it.
But does that assume, Andrew, that once we have a vaccine or once this dies down, then we go back to working the way we used to?
Yeah, I think there is a little bit of that assumption, and I think that actually the longer term picture of the market. I'm glad you brought that up because I think that's really fascinating. You had some very positive vaccine news yesterday. We remain at Morgan Stanley quite constructive on the prospects that a vaccine ultimately will be successful, that we'll see one in wide circulation by the middle of the year. But you look at the bond markets and you look at the way some of the markets are pricing also growth versus value and some of these kind of secular growth names that have benefited from the current kind of abnormality. And the bond markets these names are really pricing a world that does not return to normal. You have very low bond yields, very flat yield curves out kind of as far as the eye can see. And so I actually find that the biggest kind of disconnect with some of the vaccine optimism is I think the more optimistic you get about a vaccine, I think the more optimistic you should be getting about the world returning to something that looks more normal. And it won't go back to exactly the way it was, but I think it could go back to being more normal than is kind of currently priced in.
Andrew, what do you do with the gold right now? I'm hearing very different takes. I mean, we have a nice bump up for silver, but gold kind of seems to be the one to watch.
Yeah, gold. So look, I think narratives matter, stories matter in the market, and I think gold has an excellent story behind it. That you have an environment where central banks are keeping policy very easy, where the dollar is set to weaken. That's our currency call at Morgan Stanley, where there's a lot of uncertainty. All those things benefit gold. I think the challenge for gold is, especially now, is translating that into actually kind of a more quantifiable justification for the price, because I think you could argue that the gold strength that you've had is going kind of further and farther than what you can explain by what's happening with the dollar or what's been happening with yield. So I think the story is still good. I don't see that story changing in the near term, but I do think that what would change potentially that story is actually going back to the previous question. The better the news that comes out of the vaccine side, the better the indication that things go back to normal. That would actually start to maybe undercut a little bit of gold's narrative. So, bottom, I don't think that changes in the next kind of month or two. But in terms of trying to express those themes, I would probably prefer to do it as simply being short the dollar itself rather than to try to do it via an instrument like gold.
Andrew, thanks so much. Andrew Sheets there, Chief Cross-Asset Strategist at Morgan Stanley. Now, coming up, is the worst over for UBS? Well, the bank has signaled a return to buybacks and dividends. We'll bring you our interview with Chief Executive Sergio Ermotti later in the show. This is Bloomberg.
I'm placing stop on profit for euro at 114.39.6. Okay, stop on profit at 114.39.6. That will give us, if it will reach this level, what? £200 in profit. All right.
European Union leaders have agreed on a landmark stimulus package. Joining us now from Brussels, Guntram Wolf, director at Bruegel. Guntram, great to speak to you today. Now, you think this is a positive deal. Could this have happened, more integration of Europe and what we've seen signed off on, if we hadn't had a pandemic?
No, I don't think so. I really think the pandemic was the trigger that allowed us to really move and move in a different game. I mean, this really is a different game. This deal, it for the first time really establishes a true insurance mechanism where countries receive grants from the European Union, and the European Union actually borrows money in the capital market. So borrowing for grants is something that wasn't foreseen in the EU, and now it exists. A precedent has been established, and it is paid out according to the size of the shock of the pandemic. So really the countries that are hit the hardest economically, they will receive the largest part of the pie. So in that sense, I think really it's a big deal, and it's normal that it takes 4 days to really come to that deal, given how new it is and how really game-changing it is.
Guntram, you know, given this deal, what will Europe look like in 4 to 5 years? Is this just the first step towards real fiscal integration?
Well, I think it is definitely a step towards fiscal integration. I mean, there's no question about it. Now, everybody, of course, wants to emphasize, especially the northern countries, that this is a one-off. It's really done only because of the pandemic. And it is really a sort of just a one-off thing. But of course, it establishes the principle of long-term borrowing. I mean, the money will only be paid back by 2058, so really long-term borrowing. And the precedent has been set. So if there is a new pandemic or a new whatever crisis striking in 5 years or in 10 years down the road, this mechanism can be reactivated, and new borrowing can be done in the markets, and be paid out to the member states. So in that sense, it really is some sort of a step towards a more federal Europe.
Guntram, what have we learned about alliances in the European Union over the last month or so? Traditionally, it was always the Franco-German alliance. Does it still hold? Can they still decide, or do they need to be more inclusive with the others, especially the Nordic countries?
Well, I would say in the end, they got their way, right? I mean, France and Germany made a big proposal, and to a large extent, that proposal still went through, and they really put the so-called frugal four into desperation. I mean, especially the Netherlands was really extremely worried always since the moment that the UK decided to leave the European Union, that they would be left alone and that Germany would go down and become almost French. And Angela Merkel really made a big turn and shifted her position. And so in a sense, it was a nightmare scenario for the frugal four. And I think that also explains why they were such difficult negotiating partners. But, I think in the end, they also saw that they can't block progress forever. And in the end, they agreed and, of course, got their rebates reinforced, which is sort of the price Germany essentially had to pay to them to get them agree on the deal.
Guntram, thank you so much for speaking to us today. Guntram Wolf, their director at Bruegel. Now, coming up, Sinargan soars after finding its drug cuts the risk of developing the worst COVID-19 symptoms. We'll speak to the chief executive about this next, and this is Bloomberg.
another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a tax.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Let's get straight to the Bloomberg First Word News. Here's Laura Wright. Hi, Laura.
EU leaders have reached a landmark deal on 750 billion euros of stimulus. It will see the bloc issue joint debt to help member states tackle the economic downturn. The package includes 390 billion euros of grants and 360 billion of low-interest loans. The agreement comes after more than 4 days of negotiations and required unanimous approval. UK households are experiencing the biggest income shock since the 1970s oil crisis. That's the stark warning from the Resolution Foundation. It intensifies the pressure on Chancellor Rishi Sunak. Forecasters are warning of mass job cuts this year unless government help is extended beyond the current furlough plan. Novartis is trimming its sales forecast for the year. That's as the pandemic has hit demand for some of its medicines. Sales are now expected to grow by a mid-single-digit percentage, but in contrast, the range for the pharmaceutical company's earnings growth has been narrowed to the upside, likely expanding in the low double digits.
We have a broad internal research effort to find novel coronavirus medicines. But across these medicines, we're not looking at this as a profit driver. We've committed to really do this from more of a humanitarian standpoint.
Jeff Bezos added $13 billion to his net worth yesterday. That's the biggest single-day jump for any individual since the Bloomberg Billionaires Index was created back in 2012. Bezos' wealth is up more than $74 billion this year. That figure alone would make him the 7th richest person in the world. Global news, 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Francine.
Thank you so much, Laura. Now, shares of Sinargen, a tiny pharmaceutical firm born out of a UK university, have soared more than 500% in the past 2 days. That's after the company said its experimental drug cut the risk of developing the worst symptoms of COVID-19. Now, in a clinical trial, the probability of a patient needing ventilation or dying dropped 79% for those who got Sinargen's drug versus a placebo. Well, for more on the trials, we're delighted to be joined, and also for more on the next steps, by the Sinargen chief executive. He's Richard Marsden. Richard, first of all, there was a lot of buzz around your company, and congratulations on what we know so far. Do you think at this point the data is actually good enough for the treatment to be authorized in emergency rooms?
I can't answer that question until I've spoken to the agencies. So the data we put out yesterday was the result of having dosed people in hospital. So it was a 100-patient clinical trial with placebo against our drug, SNG-001. We've got very good data that we're really pleased with. We've got to complete analysis of that data, talk to the regulatory agencies, work out what additional data they need to consider approving a submission.
But how much more data do you think they require? I mean, so I'm not a virologist. A lot of people watching are not a virologist. I've been speaking to our Sam Fazeli, who knows and understands this maybe more than anyone that I know. Do you know if the trial, actually met its primary endpoint? Like, where are we? Give us a little bit of flavor of what you think happens next.
Well, we are pleased with the data, and it's that protective effect that you just described, but also at the other end of the scale, on the primary endpoint that we were assessing, this ordinal scale, which was proposed by WHO back in February and March as the endpoint to use. We also improved the chance that you can recover back to a level of no limitation of activities or better with this drug. So we couldn't have asked for more from this trial. And your question is a very good question, and I have to put that to the agencies, and until we've got that information, it'd be wrong for me to speculate.
Yeah. How quickly are you having these conversations with regulators and agencies, and how quickly will you get a response back from them?
Well, things are happening very quickly. The MHRA, who we've been engaged with thus far, the UK regulatory agency, have been fantastic to work with and very supportive of this clinical trial. We will talk to the EMA and the FDA, and they are processing things very quickly at the moment. But I think we're talking a small number of weeks as opposed to the normal months turnaround for this sort of engagement we need to have next.
Richard, just so everybody understands it, so once you get approval, if you get approval, then the drug and the nebulizers used to deliver it need, of course, to be produced and manufactured in large quantities.
Yeah.
Give us an update. So if you do get approval, how quickly can the rest be done?
So time is the challenge here. What we are doing is technically something that is a well-trodden path, and recognizing that time is the challenge, we started all this activity back in April at risk on the assumption that we would get good data. And our aim is to be able to provide hundreds of thousands of treatment courses, which would be millions of doses later this year. That's what we're aiming for.
Do you have enough manufacturing capability at the moment to do that? Or do you have to join with someone, go into partnership with someone else?
Yeah, we don't do it ourselves, so we contract the manufacturing out, and we've been working on that, for the last 2 or 3 months to make sure that we can hit that target that I just talked about.
Okay, but does that have to be enlarged, or at the moment, given the alliances that you have, you think you'll hit that target?
I think we will hit that target. Yeah, that's what we're aiming for. And it's more a question of scaling up. It's about expanding as opposed to starting new steps.
We close position on euro at 114.396, profit £200.
There are various ways of distributing the drug, and we are talking to a company who will be able to distribute this drug. I think ultimately it may need the might of a large pharma company to expand the distribution in multiple markets and negotiate with multiple governments. Our focus today is to get on with everything that is going to make that possible. So that is completing the analysis of the data, talking to agencies, making sure all of the scale-up activity is being done so that we can produce a sufficient drug to meet demand later this year, assuming everything goes well.
Are you in talks with any big pharmas?
We've been talking to large pharma companies because of this program generally. So we were in the middle of a trial in COPD, which is chronic bronchitis and emphysema, when the coronavirus broke onto the scene in January. So we've got a good dialogue. It's my job to have a good dialogue with the large pharma companies, and they're very interested in what we're doing.
All of them, or is there one in particular that is more interested, that you see working with more in partnership in the future?
There's a cluster of them. They have to be big, they have to be global, and generally interested in respiratory or infection or biologics. And but there are plenty of them.
Okay, Richard, thank you so much. We'll have to get you back on to have more of the details. Richard Marsden there, the Chief Executive Officer of Synargen. Now, coming up, is the worst over for banks? Is it over, the worst over for UBS? Well, the bank has signaled a return to buybacks and dividends. We'll bring you our interview with the Chief Executive Officer, Sergio Ermotti. That's coming up next, and this is Bloomberg. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg Business Flash. Here's Laura Wright. Hi, Laura.
Thanks, Francine. Billionaire Jack Ma is taking internet finance firm Ant Group public, and sources have told Bloomberg he's seeking a valuation north of $200 billion. Ant is already more richly valued than most Wall Street firms, and if conditions are favorable, we're told the company could look to raise more than Saudi Aramco's record haul of $29 billion. Bayer has failed to overturn the first jury verdict that its Roundup weed killer causes cancer, but it did get the $79 million award slashed by 3/4. That particular lawsuit isn't covered by Bayer's broader settlement, which resolves around 3/4 of US claims. Bayer's failure to get the verdict overturned may encourage some of the holdouts. Danske Bank may need to cut at least 1,000 jobs if it's to meet the latest cost-cutting goals. That's according to analysts monitoring the lender. The bank's chief executive told Bloomberg on Friday he's planning significant staff cuts. The lender isn't commenting beyond the guidance it gave last week. And that's your Bloomberg Business Flash. Francine.
Thank you so much, Laura. Now, the worst may be over for UBS. The bank has signaled it may restart share buybacks and dividends payments as soon as next quarter. That's after the wealth management division reported higher than expected net new money. Well, Bloomberg's Manus Cranney spoke to the chief executive, Sergio Armotti.
Our business scenario, the 70%, is de facto based on severe economic contractions in the next few quarters and with a recovery, although not to the same extent that we will see the slowdown in 2021 and then coming into 2022. The 30% is of severe recession, and this is really the one that we need to put in our models in order to have the prudence necessary.
Stop on profit for Japanese yen at 107.298. Stop on profit for Japanese yen. Sorry, 107.280. Yep. Okay, I'm placing a stop. It will give us £200 profit if it will go back and reach this level. Yeah.
Next 12 months in any case. So I do think that the reality is that what we will experience after this crisis is that many companies will be able to make it and go through and be probably even stronger or be well positioned for the future. And the one that were already struggling before the crisis probably will have a hard time to recover. And this is where you will see probably still a second leg of the economic consequences of the crisis being played out.
With that scenario, are we underpricing, underassuming the level of defaults that will come globally?
Well, it remains to be seen, but it is fair to say that markets remains quite complacent, I would say. That there is not a lot of, if you look at equity markets, even credit, which were quite a good investment pick, as we spoke last time.
That call, to be fair.
Well, now they are, if you look at spreads have been coming, and therefore there is not a lot of room for many negative surprises going forward.
JP Morgan says that as far as the credit markets are concerned, we are in a hallucinogenic moment. We're locked in a collective hallucination in credit markets. Does that chime for you in Europe and the US, Sergio?
Well, that's, it's not very surprising if you see across all asset classes, the amount of liquidity and money around is driving this kind of situation. So one has to really continue to look at a huge diversification and not avoiding concentration on any kind of asset class or underlying.
Do you still think there's mileage in credit, though, even at this stage with the central bank backstop?
Where in some areas maybe there are opportunities to pick up, but as I said before, the name of the game is diversification and also taking a little bit maybe liquidity risk on certain kind of investments in return of higher long-term returns.
Well, that was the UBS Chief Executive, Sergio Ermotti, speaking to our very own Manus Crani. So we'll have plenty more, of course, on the banks. We'll look at dividends. This is what the markets are saying. Now, the markets are focusing, of course, on what's going on in Brussels, or at least the fact that the EU has clinched this massive stimulus deal that seems to be binding the continent together. Stocks are actually climbing on these stimulus measures, the dollar weakening, and then I don't do this very often, but I did want to have a look at what silver was doing, rising for a third session. Coming up, a man who knows about adding value. Francesco Trapani ran Bulgari for nearly 3 decades and orchestrated its multi-billion-dollar sale to LVMH. Since then, he's turned his hand to the world of shareholder activism. He joins us next. Don't miss it. This is Bloomberg.
Climate change is the defining issue of our time, so we've redefined how we cover it. With clear data and rigorous journalism, we rise to the scale of the challenge to reveal the breadth of possibility. We look at stories from every angle to provoke debate, spotlight solutions, and make sense of the greatest crisis of our generation. Bloomberg Green, solutions for a changing climate.
It is critically important that the markets stay open in this time as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, tech has long been the poster child for growth, but steady earning growth and an ability to make money in its stay-at-home world has made the biggest tech names synonymous with quality and utility too. As the industry's earnings get underway, Scarlett Fu goes in search of potential problems.
The biggest knock against big tech, their outsized gains leave little room for misses. And investors who've been piling in may be quick to flee, especially if vaccine optimism or an improving economy sparks a lasting rotation into other sectors. So here's what could remove some of the shine from the 5 biggest tech names. For Apple, the pandemic may delay the iPhone 12 and leave the company unwilling to give a sales forecast for this quarter. Amazon revenue likely grew more than 25%, but it's also spending a lot. How much will it spend to keep its delivery network running smoothly and on COVID-19 expenses? Microsoft is benefiting from a shift to the cloud, but is it giving up some revenue now by allowing deferred payments on some contracts? And if the economy stumbles further, advertising budgets could disappear, hurting Facebook and Alphabet. Alphabet tends to rely on small businesses, particularly in the hard-hit travel sector. When you've only gone up, it doesn't take a lot to knock you down a peg.
Well, that was Bloomberg's Scarlett Fu looking at tech surge as the industry earnings gets underway. Now let's talk about the world of shareholder activism in 2020. My next guest is the former chief executive of Italian luxury company Bulgari and now owns Bluebell Capital. Some of the fund's investments include Hugo Boss and Lufthansa. Retail and the travel sector have been hit hard this year amidst the pandemic. Well, joining us now is Francesco Trapani. He's former Bulgari chief executive and founder of Bluebell Active Equity Fund. Mr. Trapani, thank you for giving a bit of time to surveillance. When you look at what you're interested in, I know you've targeted some banks, Mediobanca, I know you've talked to some cinema. How does that pandemic change the industry groups where you see value and you know, a need for change?
Yeah, basically what I would say, just to get started, is that we are invested in luxury, to be honest. And for example, we have an important long position with Tiffany, and this because we think that the rationale behind the acquisition of LVMH is very strong for both partners. For LVMH is the best way to rapidly get the absolute leadership in jewelry worldwide after having purchased Bulgari a few years ago. And it's also true for Tiffany, because if you want to aggressively invest in your brand and operations to step up your growth, it's better to be owned by a stable big shareholder than instead being totally public in the US. So we are invested there, and we wait, and we're waiting for the closing of the operation that we think is going to come very soon, not more than in the next 4 to 6 weeks. We do have also other positions.
Yeah, are you seeing any signs of
Excuse me?
gradual luxury? Are you seeing any signs of gradual luxury recovery this year? Are things getting better, if slowly?
Well, after the first half, there has been a disaster. You have seen people have lost between 40 and 50% of the business. Things will improve, but there is no way that we're going to see, at least in our opinion, a V-shaped rebound. This for many different reasons. Well, the real economy is in a very tough situation. Tourism, that is so important for luxury, is super down. So we are going to see a slow recovery in our opinion. I mean, Vox Populi, I think we can say that we are going to see probably the numbers of 2019 only in a couple of years from now, not before 2022. So another important thing is that certain companies, luxury companies today, have a very high valuation. They have a value that is very similar to the one that they used to have before COVID, and this is totally unjustifiable because of all that. So to be honest, we do have some short position on certain luxury groups.
I mean, is the luxury group industry going to narrow? Are there too many luxury groups at the moment? And, you know, what do you make a difference between a winner and a luxury group that won't survive or that is a loser?
No, well, the luxury groups that we have in front of us today are all exceptional companies, very strong, and they will continue to be leaders. The real thing is that there are some independent brands, and here comes the question, because some of them are huge companies like Hermes or Chanel, and they are out of the questions. But there are many other companies that are much smaller, and these people are under pressure. So we may see, my opinion is that probably next year, not before next year, but probably during next year.
Position closed on Japanese yen at 107.280, profit £200.
People that have lived with PE in the range of 20-25 times for the last 5 years, now they are at 45-50, and this is, as I said, I mean, not understandable immediately, because this company will not, they are not on the verge of very aggressive growth, but they're going to have to wait for some time.
So does the movement to shopping online accelerate, or does it actually change? The pandemic showed that we can buy a lot of things online. What does that mean for the companies that you like and choose?
Well, of course, the e-commerce that was already playing an important role before is becoming extremely important, especially in certain countries. Having said that, if the focus is on luxury, we have to recognize that most of the brands were doing very little with digital before COVID, so they're going to go up and rapidly. But of course, this is not something that will become super important for luxury brands in the short term. Is gaining traction. A lot of traction is gaining. Is important, very important from a strategic point of view, but it will require some time to really become dominant. And in my opinion, anyhow, especially in luxury, the brick and mortar store will continue to have an important role. Although it's true that because of digital, they will have to restructure their brick and mortar chain and probably reduce certain a number of stores and certain size of stores in certain areas.
Thank you so much for joining us, Francesco Trapani. Too short a time, we'll get you back on really soon. The founder of Bluebell Active Equity Funds. Now, Bloomberg surveillance continues in the next hour. Tom Keene joins me out of New York. And then later today, we also speak to the chairman and chief executive of Coca-Cola, James Quincy. This is Bloomberg. Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television. leaders agree a 750 billion euro coronavirus recovery package after more than 4 days of tense negotiations. The worst may be over. UBS signals the peak of the crisis is behind it as a Swiss bank considers reviving shareholder payouts. And Novartis trims its 2020 sales forecast on pandemic disruption. The group's chief executive tells us he's cautiously optimistic about a COVID vaccine. Well, good morning, everyone. This is Bloomberg Surveillance. I'm Francine Lacqua here in London, Tom Keene in New York. Tom, we have a deal. We have a European deal. It took quite a long time, but actually it seems that every side kind of, got what they wanted, and they managed to bridge the divide between North and South and also East and West in terms of rule of law. So it was a very European deal. It took ages, but they got there in the end, and everybody got a bit of something.
Yeah, I'll take it as a European deal. I like some of the analysis. I thought Lionel Laurent was particularly strong for Bloomberg Opinion. Kit Chuk's note this morning was smart. What I would note, Francine, is one calculation I saw was it was only 5% of GDP, and that's a squishy number, but that ain't much. I mean, you really wonder, will there be a second deal if this slowdown in Europe continues?
Yeah, it's 5%, but of course every country has to ask for it, so it won't go to everyone depending on whether they needed it or not. I think the other thing, Tom, is that it could be the first step towards more fiscal integration in Europe, or certainly it's a path forward, and that's probably why it's being heralded by Europhiles as something of a great deal. Now let's get straight to the Bloomberg. First for news in New York City, here's Ritika Gupta. Hi, Ritika.
Morning, Francine. Tom, as you were discussing, it's a done deal. European Union leaders have agreed on a landmark $860 billion economic recovery fund. The fund is split almost equally between grants and low-interest loans. It will unleash vital financial aid to the southern European economies hit hardest by the coronavirus, and it's being paid for by hundreds of billions of dollars of common debt. That's the first time the EU has done that. Treasury Secretary Steven Mnuchin and House Speaker Nancy Pelosi begin talks today on the next virus relief plan. Mnuchin says the next phase of relief will be, quote, kids and jobs and vaccines. Meanwhile, Senate Republicans may push back on White House proposals for getting schools reopened and business hiring. In the UK, there's more pressure on Prime Minister Boris Johnson to take a harder line on China. Today, US Secretary of State Mike Pompeo meets with senior members of Parliament. Those lawmakers want to see sanctions on China. They also want China cut from the UK's nuclear power program. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Ritika, thanks so much. Equities, bonds, currencies, commodities. I really want to take some time here because we're doing a lot on international relations and the political economy of Europe across all of surveillance this morning. What a rally, excuse me, yesterday, and it continues this morning. Futures up 23, Dow futures up 179, the NASDAQ 100 again on an absolute tear, and you see it in the VIX, which is absolutely extraordinary. 23.96. For those of you that are not part of Global Wall Street, that is a huge deal. We have vaulted from 32 down to 23.96. The long-term average is about 20. The glory days pre-pandemic were 14, 13. We've really made some headroom there. Of course, the Dow closing 26.6, now 26.810. on Dow futures. The real story for me, Francine, is in Europe, where yields have really not moved all that much. I know you'll talk about the German-Italian spread, but the German 10-year is pretty much stasis, and Euro-Swissy I'm watching as well, stasis. I was surprised, Francine, frankly, not all that much move.
Yeah, so Tom, actually, I didn't look at the spread. I mean, I looked at it, but I decided not to put it in my data check because they moved yesterday. And yesterday, we did speak to a couple of strategists saying it was already priced in. So the problem is that if you're a political analyst, you say, right, this could be the first step to fiscal integration. You know, great, Europe got a deal. This was maybe unexpected or something more than we were expecting. But if you're a trader, you would have played it yesterday. So you're right, things are moving sideways in Europe. So European stocks are climbing, a bit because of this landmark recovery plan, but the big move was yesterday after we were told that they would meet again. So it was already priced in. The one thing I wanted to show you, Tom, which I don't think I've done this year, certainly in my data checks, is show you silver, because it's extended gains above $20 an ounce. and it's a third day of gains for silver. And so there are interesting dynamics when it comes to silver. Now, to talk a lot more about the EU Recovery Fund and what it means for the markets, joining us is Jeff Yu. He's BNY Mellon Senior Strategist for EMEA Markets. Jeffrey, always great to speak to you. So thank you so much for coming on Bloomberg Surveillance. As Tom noted, a lot of the feel-good factor on the markets because of the recovery fund was before they actually signed up a deal. Is the market going to ignore the stimulus plan now?
I don't think the market will be, because they do see some of the structural changes which Europe has brought about in achieving this deal. So I think the goodwill from markets will be there for some time. Add on to the fact that the perception is Europe is handling COVID better on a relative basis and maybe can generate a smoother recovery. That will make a difference for asset allocation, especially in equities.
Does it have an impact on euro at all?
So here's going to be the interesting one, because if the equity investor, wants to actually, go in unhedged and, try to benefit, some of the currency, tailwinds that we've, seen before, then it is possible. But at the same time, if do you really want to chase the euro aggressively from these levels? That I'm a bit more cautious about, because there's lack of export growth and it could actually impact inflation as well. The ECB might push back a bit against it. But again, on the margins, if asset allocation benefits Europe, I think the euro will benefit. I just don't want to chase it too aggressively.
Jeff, I get all the good feeling, and good morning from New York, but one of the great metrics here is fiscal amount as percent of GDP. Folks, it's been 10%, 12%, 15%, 17%. Leon Laurent of Bloomberg is carrying a number this morning of 5% on this deal. Is this an itty-bitty deal?
I don't think so, because it's more about, as we've talked in the past, what is the multiplier effect, from an actual realized investment point of view, but also from a sentiment point of view. And here's, where Europe could actually stand in good stead, because if the result is northern savings are channeled into the south and actually lifts productivity, it lifts growth from a moribund basis to something that is actually longer term sustainable and strongly positive, then I think the return to growth and to your returns is better.
Great. I want you to be an engineer right now, Jeff. You're in the Netherlands and you're not happy. Dr. No got some comfort, but not too much. You're in the Netherlands and you're going to provide direct stimulus to Italy. And you're telling me it's going to have a multiplier effect. What is it going to go into in Italy? Gondolas in Venice?
Well, we know that Italy, has been looking at, infrastructure improvements, over the last few years, and there have been plenty of instances where that has been proven to be necessary. So if you are a Dutch engineer, then you should be submitting your bids, your RFPs, to the Italian government right now, saying how you can deliver the best in class. So that's how they should be looking at it. With a rising tide, it should lift all boats.
Jeff, what do you do with gold right now?
Well, gold, I still think will be seen as the quintessential inflation hedge, and given global central bankers, they seem determined to keep real rates down for as much as possible. People have been talking about Brainard's speech, let the economy run hot. That can be done only if you smash real rates lower, then gold can only do well in that kind of environment.
Thank you so much, Jeff Yu there of BNY Mellon, and we'll have plenty more from Jeff shortly. Now, coming up later this hour, the former Prime Minister of Finland, Alexander Stubb, we'll be talking to him about the recovery plan and what was agreed yesterday. That's coming up at 5:30 a.m. in New York. That's 10:30 a.m. in London, and this is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
When everything around us, including the way we work and live, has been interrupted, uninterrupted service is peace of mind. Juicy from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
Bloomberg Surveillance. Good morning, everyone. Good morning around the world on a day where Europe changes. There's no other way to put it. This is an historic deal by all accounts of the political and economic guests we speak to. This is a huge, huge shift over the 63-year history of the modern European experiment. Francine Lacroix in London. I'm Tom Keene in New York. We continue with Jeffrey Yu of BNY Mellon. Jeffrey, I've got to go to more prosaic matters like a surging stock market. And it's away from your remit, but I'm going to go there. Why are stocks surging?
So two reasons. One, we have to acknowledge the policy element, right? So monetary policy is supporting it. But two, there's no reason for markets right now, despite, let's just say, the COVID headlines, to suspect, that the broader recovery trend, is going to be disrupted. But again, the question is always, will earnings deliver? Expectations and reality, that clash, that still might come.
What does it mean for European multinationals? Not the Amazon equivalents in Europe, because I don't think there is one, but the larger multinational companies in Switzerland, in Sweden, and in all of Europe. What does it signal this day of fiscal union and also a day of corporations adapting to reality, which leads to this guesstimate of a surge to 2021?
Well, I think there are quite a few things. Firstly, for the South, that needs to invest. They're going to get the investment, but the funding costs for those investments, that's going to start to come down. So they actually will have more resources, on a marginal basis. And for European companies, multinationals, actually, if you're worried about global decoupling, deglobalization, look closer to home. So now you can actually see a surge in demand, from your immediate neighbors. You mentioned Switzerland, absolutely. So that's the first point. But the second point is they probably don't have to worry about, sovereign shocks, for a long, long time now that there's a mechanism to redistribute, right? So that is the key phrase here, to redistribute the resources. This makes long-term planning much, much more viable. Are they going to increase their investments in the region, not just seek more customers, but invest locally as well? I think that could be a lift that everyone's been waiting for in Europe.
Jeff, where do you see the most value in Europe? Do you break it down by companies or sectors, or are there also country plays?
Well, I think if you look at some of the sectors which have been beaten down by quite a bit throughout the last few months, if you look at consumer cyclicals, for example, that's where, if I would say this COVID recovery process improves, plus all the fiscal resources directed there, that is sustainable as well. Energy, probably given the state of global growth, that still might be a bit of a laggard, but the high value add sectors who are looking for looking for new sources of growth, not just in China, but elsewhere in EM. Now there's Europe as well. I think they stand to benefit the most if the investment flow actually does come through. That could be a next year story, if you look at the mechanisms. But again, I think the sentiment can sustain itself for some time to come.
Jeff, we're just looking also at pictures coming out of Brussels of the frugal four leader, the Swedish Prime Minister Stefan Löfven. I think giving a briefing. I'm not sure if I do think it's actually in the Justius Lupus building over in Brussels. When you look at the way that Europe bridged differences between North and South and East and West, are we going to see a more integrated Europe, or are we going to see, the Franco-German alliance once, continually being not attacked but not listened to?
Well, I think that's where we need to caution our expectations somewhat, because let's bear in mind this was a one-off. Now, the budget framework was always going to happen this year, but if COVID had not happened, will we have, let's say, a part of the budget which would be financed by common bond issuance? I don't think so. So let's be clear there. Now, this does mean see you in 7 years' time. Can the next budget process formally incorporate something along the lines of what we saw to support this grant issuance framework? Can we actually see proper steps towards perpetual common liabilities in the next budget approach? I think then that's when we can truly get the Hamiltonian moment. But again, see you in 7 years' time.
I don't hear people today talking too much about a Hamiltonian moment. We'll explain that here in a bit. Jeffrey, you have a brilliant brief. Thank you so much. He is with BNY Mellon, their senior strategist for EMA markets. There's much more to come. We're going to look at these markets surging. Futures up 22, Dow futures up 164. Again, the VIX on an absolute two-day tear, 23.93. But yes, we will continue to focus on this historic moment for Europe. We're thrilled again to join us, Wolfgang Munchow of Euro Intelligence. He's been very kind to us over the last week or so. Wolfgang Munchow coming up next. This is Bloomberg.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
This was that crisis, and that's what we delivered with a 15+% ROE. So I think it validates the strategy, but it's our strategy. It's not for everybody. This is what we chose. We didn't want to be credit heavy. We want to be flow-based, fee-based, asset-based.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
The stakes couldn't be higher. The differences remain very, very great, so I can't predict whether we'll reach an agreement here.
I would say less than 50%, but let's be hopeful. You never know.
I don't like blame game, but the Dutch man is the real responsible man for whole mess.
We have to be cautious until we're at the last stretch.
The majority of the member states trying to come closer to 4 countries, but they also need to make an effort.
We have also come up with a response to this arguably biggest crisis of the European Union.
Today we've taken a historic step we can be all proud of.
The conclusions reached as a result of this summit are truly historic.
We sent a strong signal to Europe, to Europeans, and to the rest of the world.
Well, European Union leaders have agreed on a landmark stimulus package after 4 days of dramatic negotiations. In fact, Tom, just for our people on the ground in Brussels, wrote this brilliant story for the backstory, which basically said the leaders started off on Friday on a sunlit terrace drinking mineral water and finished in the early hours on Monday with wine and potato chips. I thought that was a colorful image that kind of encapsulates the tense negotiations that we saw. Joining us now to talk about all of this is Wolfgang Munchau. He's your intelligence director. Wolfgang, great to speak to you, especially on a day like today. You're optimistic, but you're also a lot more cautious than many other people out there. What do you worry about given the deal that was mustered together?
I mean, what's good is that France and Germany hang together, and that there is money going to Italy and Spain, and we should not talk this down. But if you look close to this, if you look close at this deal, and at the acrimony that was, that it caused, there were lots of things we wanted to do with this budget, or the EU wanted to do with this budget, that it cannot do. It cannot link the budget to rule of law compliance. The East Europeans, Viktor Orban, the Hungarian Prime Minister in particular, he got what he wanted. They also wanted to get rid of these budget rebates. We remember the British invented the whole concept by asking for a rebate in the 1980s. Margaret Thatcher got it, but we knew where that ended. And now Britain is gone. The Netherlands, Austria, Denmark, and Sweden are all demanding rebates and got rebates. In the case of Austria, Austria even doubled the rebate it got because of its difficult negotiating position. And the third thing is the EU had earmarked, the European Commission earmarked a lot of money for investment into digital technology, transition and to climate change, research and development. Much of that money was cut in order to give enough space for this fiscal transfer. So basically, this is not the kind of budget the EU wanted. So a lot was sacrificed for that fiscal transfer, and we have to basically see or ask ourselves the question: is this worthwhile? Especially since this recovery facility isn't all that big. I did the math this morning, and I came to 0.7% of GDP for 3 years running. That's not nothing, but it's not this great discretionary fiscal boost that people had hoped for.
But Wolfgang, is it better than nothing? And a lot of the Europhiles say this is the first step towards more integration. Now, we were talking in the break that there's a chance, and I don't know how big that chance is, that Parliament says, actually, it is not worth it. But would they ever say that where it's, the path is towards keeping Europe together?
It's certainly, you cannot conclude from this package that this is the beginning of a process that will eventually lead to a mutualized fiscal policy with a mutualized debt instrument. You can't say this because it's an exceptional thing. It was based on laws that make it absolutely clear that this is exceptional. So you can't, base something on an exceptional law and then say it's a precedent. That would be a contradiction in terms. So they would have to do it again. They would have to do it. They really have to change the treaty in order to institutionalize that. And After what happened over the last 5 days, I see zero chance of a treaty change that would accommodate the Dutch and the Hungarians.
Wolfgang, we're going to come back and talk about this, but this goes to the heart of the matter, and the matter is Strasbourg. I want you to explain to our global audience right now that this is not 12 people in Brussels, 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 and that Strasbourg and the European Parliament really matter, particularly on Poland and Hungary. Are they going to tell Brussels to go to hell?
They will not use your words, but they may do so. And what we've heard this morning, they were not happy with this. They were certainly not happy on the rule of law, and rightly so. I'm not happy with that either. They were not happy about the investments that were culled by this plan. It's quite brutal. So, I mean, the Commission had proposed money for lots of good things, and actually these were the most encouraging things about the budget. Also, equity investments in companies rather than loans and grants. I mean, there was some forward-looking, innovative stuff in there. It's all gone, or most of it is gone. And they're not happy with this. So what they might do, and this is my expectation, they're not going to sit down and vote it out, but they might say, we want changes to this. So the whole thing might go into another round. And one of the leaders, the leader of the socialists, already said he would like this. He would like another round, another European Council meeting to sort out the difference between the Council and the Parliament. So the Parliament, let's just say, it's going to be difficult. They're going to be difficult.
We're going to come back with Wolfgang Munchau. We're really squeezed for time. Just a superb show today, but this is so important. We're going to come back with Mr. Munchau. I really want to stay, folks, that this is important what Wolfgang is saying, that this is not all happy, happy, happy on a Tuesday morning. It's not happy in Washington. We know that for certain. You may get presidential pandemic press conferences this afternoon. Mr. Van Hollen of Maryland. Look for him in the 8 o'clock hour. This is Bloomberg. Good morning.
Now, if we continue in the trend we are, by 2030, we will have 840 million people undernourished. And COVID-19 exacerbates that even more. And our projections is that with COVID-19 in 2020, we will increase undernourishment between 83 and 132 million people more going into undernourishment.
a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
Bloomberg Surveillance. Good morning, everyone. Tom Keene in New York, Francine Lacroix in London. Truly an historic day for London. We're trying to give you the perspective forward, not the happy and the high fives as an exhausted 5-day soiree. We can do that with Wolfgang Munchow of Euro Intelligence, of course, his magnificent work over the years with the FT Deutschland and all of his thinking about his Germany and about Europe as well. Wolfgang, in Strasbourg, the process is they've got to get this thing through. You've alluded to a redo. What is the power that Eastern Europe has right now? What is the spell that Hungary, Poland, and the rest have over the more diplomatic West?
They have, at this point, a great power because their assent was needed for this budget. So if this goes into a second round, they could veto this. And any one country can veto everything. And that's why Orban got away with what he did. He basically said, I will not accept a rule of law linkage. And that's why, in the end, they give him that. And if it goes to the parliament, and whatever the parliament may say, there can be no budget without the complete assent of every other country. So this has to be a compromise. And, I believe they will compromise in the end. So these things, the EU is a deal-making machine. So all I'm saying is this will not be vetoed and then will come, the whole thing will end. This might go into a second round, and some of these things that was taken away in this deal will be clawed back by the European Parliament. That will be the procedure that I expect to happen over the next few days.
You're a great student of this. What would Konrad Adenauer, what would Helmut Kohl, what would Valery Giscard d'Estaing, what would they say of this moment?
What I think some of them would have done is they would probably have gone a different route. Anyone who many followers of the EU and especially of Europhiles would have preferred a smaller group of countries to do this, rather than getting this done as the whole of the EU, proceeding with a smaller group, but then having a bigger facility. For example, they could have chosen a route called enhanced cooperation. It's a perfectly legal route. Countries, at least 9 countries, can gang up together and do whatever they want to do among themselves. And they could have had a much bigger budget. They could have done this, and especially since Germany, France hang together, and Italy and Spain on the same side, the big 4 countries on the same side, they could have basically kind of done this among themselves with a few allies, and they would have had definitely enough to get over the threshold of 9. In fact, they would have gotten far over that threshold, and then the Dutch could have stayed outside. And it would have been a choice for the Dutch and the Austrians to stay outside because, if this thing ever breaks, then that's where it would break. And that's a risk. At the moment, the Dutch and the Austrians faced no risk. They could pretty much do whatever they wanted. That's why their negotiating position was so strong, because in a budget negotiation, everyone has a veto.
But Wolfgang, and why did they not do that? I know the voting rules are different, but for example, when it came to the Eurogroup president, there was the clear candidate for France and Germany that wasn't voted on. That Nadia Calvino did not become Eurogroup president. Was that a warning shot that France and Germany cannot rule Europe?
That's right. France and Germany alone cannot rule. There are simply too many countries. There was a time until about 10, 15 years ago when that was possible. That's over now. France and Germany alone don't have a majority. I mean, and Nadia Calvino was defeated by, I understand, only a single vote. So the majorities are very narrow, and you need coalitions. And the reason they didn't choose that alternative route is because there is this ultimate desire for the EU not to split. After Brexit, people are absolutely paranoid of the idea that another country might leave. So they value unity over pretty much anything else, and that's why they were ready to make compromises that they probably wouldn't have made under normal circumstances. And they're deal makers, and the unity at the moment is the thing that they prioritized.
Do you see, on the numbers, on the actual help for the countries, you calculated to 0.7% of GDP. I think that's the number that you said, and we're doing our own calculations. But will there be a second package? Will they need a second package?
No, there cannot be a second package. That's the EU package. There can be, unilateral packages. I don't think there would be space for that, because what this package now does is, in the political space in France and Germany, people will say, okay, we've done our bit. We've helped Italy, or we've helped Spain. That's the size of the package. Now, it will be more than 0.7% for Italy. The 0.7% is the average for the EU as a whole. This is the size of the grants element of the package. For Italy, this may well be more. In fact, it is a lot more, given that Italy is in total size the largest beneficiary.
Oh, okay, great. It's more for Italy. Is it less for the Netherlands?
Yes, absolutely. It's much less for Belgium. Belgium is badly hit from the coronavirus, both in terms of health and in terms of economy. It'd be much less for Belgium. I mean, it's much less than 0.7% for Belgium. So Belgium is a net contributor into this rearrangement of funds. And they decided this purely for political reason to accept it, because everyone is afraid that the Eurozone would break up. And that was the reason for them to do that. But, this is not big enough to prevent, Italy has a solvency problem. And it needs the ECB to continue to buy its debt to remain solvent. Without that, that wouldn't happen. So we are vulnerable to an increase in inflation. We are vulnerable to political pressures, to political developments in Italy, and to political developments in France. But we don't know how that ends. So there are a number of challenges ahead this decade for the unity of the Eurozone, and they wanted to take a first step. And I welcome that element of the package, that they actually recognize for the first time, and that Germany recognized for the first time, that something is seriously adrift, having been in denial over that for like a decade.
This has been an historic day and an historic conversation. Wolfgang Munchau, thank you so much, with Euro Intelligence, their director, and of course decades of experience on these political events. Speaking of political events, Policy Matters, Vice President Biden, he proposes a $775 billion, I'm going to round that up, called $800 billion plan. This for children and the elderly, and it will be funded out of a real estate investment tax, a proposal by Mr. Biden. I'm sure there'll be much more on that through the day. With our first heard news in New York City, here's Ritika Gupta.
Thanks, Tom. As you were discussing, European Union leaders have agreed on a landmark $860 billion plan to rescue economies hit hard by the coronavirus. It's built around a first for the bloc, hundreds of billions of dollars of common debt. The emergency fund is almost equally split between grants and low-interest loans. Italy is likely to be the biggest beneficiary. It was the original European epicenter of the pandemic. The Trump administration has now come out and endorsed mask wearing. President Trump has long resisted covering his face in public, but he tweeted that, quote, "It is patriotic to wear a face mask when you can't socially distance." Polls showed that the president's refusal to endorse masks was out of step with citizens terrified by the coronavirus resurgence. The richest person in the world just got a whole lot richer. Amazon CEO Jeff Bezos added $13 billion to his fortune yesterday. It's the largest single-day jump for an individual since the Bloomberg Billionaires Index was created in 2012. Give the credit to Amazon, whose shares rose almost 8%. Bezos' fortune is now worth more than $189 billion. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Tom Francine.
Thank you so much, Ritika. Now, coming up, we speak to the former Prime Minister of Finland, Alexander Stubb. We talk about the EU recovery plan and what happens with the parliament. This is Bloomberg.
inflation goal is symmetric, which means we should overshoot it. We're having a difficult time doing that, like all developed economies. I'm supportive of the idea of letting inflation get above 2% before we take any action with respect to the Fed funds rate.
This is Bloomberg Surveillance. Tom and Francine from London and New York. So, Tom, we've been saying it all morning, 4 days of tough talks, but European leaders finally have agreed on a landmark stimulus package that will see the bloc issue some 750 billion euros of joint debt. Now, the deal represents a victory for a collective EU response to the crisis.
Has now a big chance to come out stronger from the crisis. Today, we've taken a historic step we can be all proud of. But another important step remains ahead of us.
Well, joining us now is Alexander Stubb, the former Prime Minister of Finland and professor at the European University Institute. Alexander Stubb, as always, thank you for giving us a bit of your time. Now, we had a lot of optimists on TV saying this is great because it's the path towards fiscal integration for the European Union. And then we had a much-needed reality check with Wolfgang Münchau saying, look, the Parliament didn't get the 4 criteria that it actually wanted. Where are we on this? I guess a deal is better than no deal, but is it the right deal?
It's never the right deal. It's always going to be suboptimal. But I think the most important thing is that there's a deal. It's unprecedented in terms of size, in terms of scope, and in terms of timing. And I guess, you know, people like Wolfgang Münchau, he's a columnist in many ways and has to bring the negatives. I take the positives out of this. I think it's a great package and a job well done.
What does it mean? If you look at the calculations, it's actually a very small percentage of GDP. Will it be enough to actually stem the crisis, or does this just show political will of keeping Europe together?
Combination of the two. I mean, remember that the EU budgets are usually only about 1% of the GNI of the whole area. This sort of doubles it up for a few years. But I think the message to the markets is that when there is need for a recovery fund, when there is need for partial mutualization, when there's need for a big deal, the European Union can pull it. Remember that the ESM, the European Stability Mechanism, during the financial crisis, it took 4 years to put it together. This time around, this package took 4 months, and I think it's therefore a good package.
Mr. Prime Minister, good morning. I do note that it is 17 hours, 41 minutes of sunlight today in your beautiful Finland, up before 5 a.m. and the sun going down after 10 p.m. It's not fair, folks. Mr. Prime Minister, I look at the distance from Helsinki to Rome, and it's way more than 1,700 miles. It sounds to me like the distance from Helsinki to Warsaw or the distance from Helsinki to Budapest is far more tangible. What do you and others in the west of Europe say to a fractious Eastern Europe?
Well, first of all, I must say that I now travel that distance down to Florence in absolutely no time. I think in all these types of negotiations, Tom, there's always going to be tension. This time it was on the money level between the north and the south. Should we have more loans and more grants? And then on the conditionality of the value issue, it was between the East and the West. And I think where everyone landed was somewhere smack in the middle. As a Finn, I feel quite comfortable with this package. As a European, I'm really happy about the outcome.
Alexander, I'm very curious of your thoughts of this raging pandemic debate over the path taken by Sweden. It's just a fascinating Scandinavian experiment. Frame out the path from Oslo to Stockholm to Helsinki about how you all treated this virus.
It's been quite different. I mean, you know, Sweden had a very, what I would call liberal and relaxed way of approaching it. Whereas in Norway, Denmark, and Finland, and partially in Iceland, we went into, well, I would call it semi-lockdown pretty much immediately. And I think in terms of death toll, the results can be seen. But I think we don't know enough about the virus yet at this stage. One thing I want to add, though, is that we as human beings have a tendency to over-rationalize the past, over-dramatize the present, and underestimate the future. My take is that it'll take 10 years before we understand what actually happened, whether Sweden was right or not.
Alexander, are we going to have more fiscal integration in Europe? Or is the package just a one-off?
I think there will be more. I mean, my argument is always that integration in one area leads to pressure to integrate in another one. And the EU never wastes a good crisis. It didn't happen during the financial crisis. There were advancements, banking union, and the rest of it. And I think this will lead more towards a fiscal union. Of course, it's not going to be a full Monty. We're not going to be 100% fiscal, but it will take the next step in economic and monetary union towards fiscal. So this package is more integration, not less integration.
More integration that will be substantial, or is it going to be other fights?
Oh, there are always going to be other fights. Remember, this is, soon to be a union of 27 member states. You're always going to have 27 different views, and then at the end of the day, after a crisis, after a chaos, you come up with a suboptimal solution. And that's what will happen in a few months. That's what will happen in a few years. And the thing I find so, I think, interesting and historic about this deal is that, as I said earlier, it's the scope and the size. I mean, I never believed that the EU could pull this off. And hey, I give credit to the European Commission, Ursula von der Leyen, and especially to France and Germany for pulling this rabbit out of the hat. It showed European unity. And I think Europe has been probably the best in dealing with this crisis.
Will this deal be blocked by Parliament?
I think it's going to be blocked, but I'm already getting messages from my friends in the European Parliament that, hey, this is not over yet. And of course, the European Parliament has budgetary power, so there will be a back and forth and a conversation with the European Parliament. And remember, unlike in normal government parliament situations, government opposition, the European Parliament actually has a lot of power to negotiate this. So there will be a few tweaks into this deal, but I do not see the European Parliament blocking this deal because that would be to the detriment of the whole European Union.
Absolutely fascinating. We are thrilled that you could be with us today. Alexander Stubb is a former Prime Minister of Finland, professor of European history at the European University Institute, I should say. Folks, just amazing to get the map out as an ugly American with Helsinki to the east of Athens and really on a longitudinal line with Istanbul. I didn't know that. The sprawl of Europe is just extraordinary. Coming up in our next hour, we'll get back to more conventional economics. Futures up 23, a booming stock market, but around it, a fragile American economy. Ian Shepherdson will join us with Pantheon Macroeconomics. This is Bloomberg. Good morning.
Some things you see coming, suppose you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance. Tom and Francine from London and New York. Now, a coronavirus vaccine in development by the University of Oxford and AstraZeneca is showing promising early results. This comes as California, Florida, and Arizona all reported a slowdown in the increase of new cases. Well, joining us now is Oksana Pisik, UCL lead of the Outbreaks and Global Citizen Program. Oksana, thank you so much for coming on. These trials seem to be in very early stages. Does having an autoimmune response mean that we can actually get a vaccine? We don't know how long these responses actually last, the antibodies.
Good morning, Tom and Francine. Yes, we do have positive news around this Oxford trial. We have evidence of an immune response, but presence of antibodies in itself cannot prove that it will actually prevent the disease. We also expect that there will be, there has been shown a T-cell response in itself. The real test will be to see if there's going to be any possibility of reinfection, how long there is protection against the virus as well as unknown. So many questions remain, but the purpose of this first phase 1, phase 2 is to really identify whether it is safe to continue and to get an idea around dosing. So we've got the green light on that, and we can now take it to the next step, which is really important. But we should not get ahead of ourselves and assume because there are antibodies present that this is going to definitively work in the population. Now, because that doesn't necessarily confirm an immune response. Now, while this vaccine research is evolving and accelerating, we estimate that maybe October would be the earliest that the Oxford team could produce this. In that time, we still need to continue all the public health tools at hand to suppress transmission in communities. This has been possible in all sorts of other settings with other viruses ranging from smallpox to polio and Ebola. So in that time, with the winter months just around the corner, it may be too soon to pin all of our hopes on a vaccine.
I mean, if we do get a vaccine, Oksana, how far away are we from it in terms of, you know, getting the trials in production? And what are the chances that we never get a vaccine?
Well, this is, luckily there are 23 vaccine candidates in clinical development. So if this particular vaccine does not pan out, there are other strategies and techniques that are being used by various companies. Now, the team at Oxford is projecting a very optimistic timeline, even as early as this fall. But again, we'll have to stand a much wider test, taking just from, it was only about 1,000 people who participated in this one trial. Statistically, we need to get that up to much higher numbers, to 10,000, and also in diverse populations. So we had healthy volunteers, we had volunteers between the ages of 18 to 55. But what we really need to say, we know this virus is actually most dangerous for those who are elderly, for those that have underlying health conditions as well. So those are things to keep in mind.
Oksana, I want to go to your pharmacology expertise out of Canada and at UCL as well. How are we going to distribute this vaccine through pharmacy? I don't mean the first glory days, but over the months, the quarters of the years, what will be the pharmacy approach to distributing whichever vaccines are efficacious?
Distribution may be even the largest challenge that we're going to face with this particular vaccine. especially when we look at the one coming out of the Oxford trial, because of the techniques used, there can be some variation in concentration of the final solution when mass producing billions of doses. When it comes down to the pharmacy level, of course, this is going to then have to come down to the government negotiations with the pharmaceutical companies. And we've already seen moves for this vaccine from the UK front, and then that will channel its way towards the pharmacy distribution. But
we have to go, Oksana. Okay, I'm sorry. Oksana Pesek, thank you so much with UCL as we end this hour. The market's very interesting. Futures up 23, Dow futures up 163. Bond market giving a little bit of a risk-on field of 3.99. This is Bloomberg. Stay with us.
Opportunity knocks at the door. Don't say, blimey, I've still got my pajamas on. Say yes to stuff and it will take you interesting places.
We're clearly going through some very unusual times and, enormous difficulties getting groups of people to agree on things.
From Bloomberg's European headquarters in the City of London, join us on Leaders with Lacqua.
see coming. Some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
The national security bill was passed by Chinese lawmakers. The Hong Kong police force has already acted in accordance with the new law.
It's a very disturbing development.
This is, in effect, an attempt to end one country, two systems.
The central government is telling us just stay out of politics.
This morning, let's make a deal over a dinner of carrot soup, cod, and lemon cake. Germany and France, they give in to Rutte in the Netherlands. The West modifies to east to south, makes